Big call coming up. Back to Philly after this.
All right, guys, we're going to get started here in a moment. Let's see. I'll let everybody know that we're going to get started. Did post the link kind of late, so. Okay. All righty. So let's get to markets here. Okay. So let's see. So last week, basically kind of exactly what we kind of expected to happen, right? So Friday of the week prior was this day here. And we've had a pretty obvious trend that we've been following, right? So it's kind of been the same story here. So push away from the mean, and then a move, move to 3 ATR back to the mean. And then we kind of continue and do the same thing over and over again. So 3 ATR back to the mean. Then we change trend, flush to 3 ATR back to the mean. 3 ATR back to the mean, 3 ATR. And then we made our way back to the mean. So that's just been happening over and over again. So the past 5 times we've had to push to 3 ATR from above or 3 ATR from below, we've had to move back to the mean, right? So that's kind of number one and the most obvious. Next, you can see so the first kind of trigger last week that gave me, so I already had this kind of bias that we were going to flush to the mean and bounce back, or flush, when we have this flush to 3 ATR, we're going to have a move back to the mean. That initially came from and was confirmed on Monday when we had a close of this bar here, closed above the low of the high bar. So, or the high of the low bar. So this candle here made a low, or this bar made a low, right? Once we get a candle close above that, typically that's the first signs of a reversal. So we had the candle close above or right at, and then we confirmed it the next day as well. And then kind of what happened from there was we had the put call ratio, which let's see if we can get to, let's see what day that was. So that was Tuesday, the close of Tuesday. So you can see here, we had an extreme reading on, so it was Wednesday. We had an extreme reading and closed at 1.15 on the put call ratio, meaning that pretty much everybody was bearish, right? So with that first in mind, we automatically want to be thinking, okay, there's probably going to be a short covering rally. So all that I did was, once I saw that we were getting this reversal of hitting 3 ATR, we had this close of the high of the low bar, signaling a reversal. It's like, okay, we're probably going to go revisit the mean. That's kind of the first step, right? So we're overextended. We're probably going to head back to the mean. So then we took Microsoft calls. And I'm kind of giving you a recap. So then, even though it's not going to help you for next week, it's going to help you in the following days prior, right? So like going forward. So we entered Microsoft calls on this day here, gapped up. Our target was 350. We kind of blew past that on Friday. But that's how simple it was. So I had a bias in the market. I thought we were going to have a move back to the mean. And so what did I do? I looked for the strongest stock and the best looking stock, which to me was Microsoft. And once we had that, or once I had that bias of what the overall S&P 500 was going to do, we just took Microsoft calls, and it was kind of like a compression, right? So as the market was moving down, we were chopping sideways for Microsoft showing strength. So it's like, what's a good example? Okay, you push the spring down and keep pushing it down and keep pushing it down. And then when you release it, it's going to pop up, right? So that's kind of what was happening. So when the market kind of released its pressure to the downside and started moving back to the mean, it gave Microsoft the go ahead to have a strong move up. And so that it was pretty simple, clean play, huge move, about $20. Okay, so now we're sitting at an interesting spot in the market. So we kind of got a lot to go over here. So first, we're still in a downtrend, right? There's nothing that is really fighting that. As you can see, all EMAs are stacked negative. So we kind of we're still in a downtrend, right? Nothing has changed about structure. Like we are lower high, or a high, then a low, lower high, lower low, lower high, lower low. And then now we're back at a lower high. So it just depends if we're going to break through kind of this area right here. So what I'm looking for this week is I'm cautiously bullish, but the big thing is when we pull back, how is the market's going to handle that pullback? That's the main thing we got to pay attention to here. So it's like we really got to see, okay, for this bullish trend to, or this bearish trend to reverse, we have to see this kind of turn over. We need to see basically us to handle the pullback well, right? And so if we look at like NASDAQ here, you can kind of see, okay, we're kind of in a bull flag, essentially. So on the weekly time frame, right? So I've been saying this for months now at this point, that this is just a bull flag and it's going to remain a bull flag until it fails. So we're going to continue to watch this. And I think that the first things you're going to want to get long are, and we'll talk about some names after this, but the first things you want to go long are tech stocks. That's kind of going to be my first things I'm paying attention to. But really the question of the week this week is, how are we going to handle this pullback? And if I had to guess, this is kind of looking like a little bit of a possible inverse head and shoulders situation. But I don't know if the shoulder is going to pull back all the way down here. I mean, at this point, we have to liquidate some of the people in calls. So, because we had such a strong run up, I mean, basically from these lows here, we've had almost a 200-point run, $20 run in SPY, right? So we kind of have to expect there might be some sort of pullback. We still have a lot to fix in terms of structure. But basically you can see, like if you look at the histogram, you look at the ATRs, you look at the moving averages, it's kind of the same thing every time. Like we have a squeeze, we fire off from the mean, and then we hit 3 ATR, we lose momentum on the squeeze, we pull back, and then so on and so forth. So let's look at some of the things like, so in terms of the S&P 500, NASDAQ, stuff like that, really comes down to how are we going to handle this pullback? I'm leaning bullish because we have a squeeze. We have structure still looks good on the weekly time frame. But lastly, we're kind of looking at, okay, how are we going to handle this pullback? And I'm expecting us to bounce somewhere in this area of this cluster of EMAs, right? And then I need to see this momentum kind of turn back over. And then it will kind of open up the door to upside. And once this weekly squeeze fires off, and I kind of expect it to go to the upside, I'm expecting an easy move back to all-time highs, and then ultimately probably back up to that 5,000 area. So that's kind of my perspective here. And I'm sure a lot of people do have opposite opinions, and I welcome them because that usually makes it easier for the markets to move up, right? Okay, so that's a whole lot. That's kind of like the overview of the S&P 500. Now let's, my opinion isn't, and it can change obviously very quickly, but that's what I'm kind of looking at going into the markets this week. Now there's things that can change or that give me that point of view as well. Not just the, let me get this off. No, that's not it. Wow, where is that? Okay, here. So it's not just the S&P 500 that's giving me that idea, or tech stocks, right? So a few kind of critical things have happened in the dollar, and we talked about this a lot for on Friday in live trading, right? So looking at the dollar, we had a weekly squeeze, it fired off long. That's why we saw this strong momentum in the dollar recently, and we had a lot of pressure on the markets. If you go look, the lows for the dollar were right around the 10th of July. So the beginning of July, you can see the high was just after that, like 10 days later in the S&P 500, and we've had trouble moving higher ever since and kind of been in this downtrend, right? So notice this on the weekly time frame. I'm sure a lot of people, if you were playing long, it was pretty simple to make money in end of May, June, July, and you were able to catch a lot of upside. This was easy swing trading. Why? Because we had a weekly squeeze, clean signal, fired long, and we had a huge move upside, right? Okay. So now what we're looking at is, notice what happened after the first bar of lost momentum. So we had momentum lost here on the weekly time frame, and then ever since then we've chopped. We haven't done anything. Now we're just setting up for the next weekly squeeze. So that's going to propel us in the next direction of where we're probably going to go. So like, for example, here, we were in a squeeze, we fired short, and we had a huge move down. And this is kind of when the best swing trading comes about. So you can see we lost momentum here. Now keep that in mind, right? When we had this loss in momentum here, we kind of just fizzled out and kind of chopped around. Now, if we go look at the dollar, we had a weekly squeeze, right? Fired off some upside. And then we had our first bar of lost momentum. So that's a good sign for the markets. And you can kind of see that, see how it played out here. It usually plays out pretty similar across the board. And we can use this histogram to tell us momentum, right? So the dollar, the weekly time frame is losing bullish momentum, which gives us the idea, okay, the dollar might not be as strong now. It might be breaking down. So the equities stock market can push higher. It'll make it easier for that. Not only that, we've been holding the support here, the support level around 105.6, and we bounced here. So it was a rejection, kind of resistance turn to support. And so once we broke it, we bounced here, we bounced again, and then now we broke. So now the really a big test, in my opinion, is if we are going to hold under this level. And if we do, that's going to open the door for more upside, and potentially we could see structure starting to break down. So the EMA starting to cross negative, kind of forming like, okay, we might head lower. And once we get that, I'm kind of expecting us to kind of move down to this 200 EMA area, and really probably this area right around here. So we can just draw that support or resistance, whatever, or was resistance may turn to support. So I wouldn't be surprised to see us come down, test this area here. And yeah, I'm looking, so really it wouldn't be that 200 SMA, it'd be more so around this area right here with the final line in the sand, the 200 SMA. So this was kind of a big moment Friday, that when this happened, when the market started to break down or the dollar started to break down, it gives a lot of good signs for the market. Now, not only that, the dollar's starting to break down. So we've kind of got two key elements, right? We've got loss of momentum on the weekly squeeze. It means the weekly squeeze is over, right? Next, we broke below this key support level. We've got bearish momentum starting to flip downside, and we had a red dot squeeze. Now we're bringing to a black dot squeeze, so it's kind of giving us an indication like the momentum may release to the downside. Not only that, we've got a beautiful monthly squeeze on the S&P 500, and we bounced directly off of this support area right here. See how it was kind of resistance here, resistance here, resistance here. If you really wanted to draw it right around here, we had that support right at the 21 EMA, and we bounced directly off of it. We've got bullish momentum. So this really could propel us to much higher in the next 3 or 2 years or so, right? So if this weekly squeeze decides to fire off to the upside, we could see long-term momentum for a while. So here's a few examples. Monthly squeeze, we ran from October 2016 to February 2018. Okay, here's another weekly squeeze, right? We had the COVID happen, shake people out, got stopped out at this low, right? And then once it fired off, we had a move, strong upside, which was very great swing opportunity for people that are swing trading, from May 2020 to December 2021. So it typically, you can see here, it lasts about a year and a half. Here lasted a year and a half. So we can kind of expect that same idea here. So that's what I'm kind of looking for. Now, what we need is this weekly squeeze to ultimately give us that signal, and we can catch this to the upside for potentially another year and a half, right? So kind of going based off statistics and what's happened in the past, that I think, and this is not financial advice, right? This is my own opinion. I think the low is in, like, this was the lowest we're going to see this year. That's my opinion, but I think this is the low that we were going to see this year. I think the downside is over. I think we may either chop around for a while, or the squeeze is going to take us off, and NASDAQ is going to lead the way and potentially take us. All-time highs is an easy target, right? So then it kind of gets sketchy or not sketchy, but a little more difficult from there. So I'm looking for kind of that 1,700 or 17,000 area first for the NASDAQ, and then 18,000, kind of those whole numbers. If you like fibs, you can do this. Oh. And this is just a longer term view, right? And then potentially we got that retracement here at 18,500. For S&P 500, what I'm thinking here is 18,500. Let's see, around here, 5,200, right? So I think 5,000 is the first big number we have to get through. But okay, so we've talked about the dollar, right? The dollar is showing us signs of weakness that it may break down. Let's take a look at the monthly. This one still got bearish momentum going, right? So monthly, not too much to look at here. But weekly, losing momentum. Daily, I think, is starting to break down, right? And I'm looking for us to come down to this support and see what happens from there. And then, like I said, beautiful weekly squeezes, not beautiful, but decent weekly squeezes on the major indexes. And then, okay, now let's look at tech. Tech breaking out of this bull flag right near all-time highs. And we're already showing the first bar of lost momentum, like we're gaining momentum to the upside. Okay, let's look at the monthly here. Monthly squeeze is already fired off, right? So this weekly squeeze can just keep us propelling, right? And tech is probably going to lead us. So NASDAQ looks the same. Weekly squeeze fired off, or monthly squeeze fired off. Weekly squeeze has yet to fire off, and we can keep this thing going. This expectation for this is about 6 to 10 bars, right? So we've got at least 6 to 10 months of upside momentum, and I think it may be triggered by this weekly squeeze. Okay, so the dollar is one of the main things that we're pointing towards. Okay, next thing is the put call ratio. So the put call ratio, I've been talking about this for a couple months. So ever since we got this reading of the 10 SMA above 1.0, which means too many people are bearish in the markets, right? And that was happening end of September, and we've kind of held above it. Now we're starting to break below it. And now we might have a swift move back to below this 0.8, which is going to mean a lot of people are going to have to get long before this can happen. So you can see here kind of what happens over and over again. We get that reading above 0.1, we flush down to 0.8, above 0.1, we get middle level reading. This was more different because it was the bear market. Above 1.0, back to 0.8, above 1.0, back to 0.8, held low, and then now we're back above 1.0. So I'm kind of expecting the same thing. I'm expecting this momentum to kind of shift to the downside again, right? So that's reason number 2 of internals that we can look at. That's giving me a reason, right? So we've got the dollar, the Dixie put call ratio. Another shorter term view. Okay, look at the weekly squeeze on the VIX, right? So the weekly squeeze, we've got bearish structure. We've got loss of momentum on the weekly squeeze. It needs to fire off, hasn't fired off in a very long time. So on top of that, we have kind of the VIX falling apart already. It's falling apart. It looks like the weekly squeeze or this daily squeeze is going to fire to the short side. I'm kind of expecting something maybe like this, which is, and then so there, and then kind of move back to the 52-week lows. So, but the thing is here, this is going to be very contingent on, like I said, the daily time frame for the S&P 500 and the NASDAQ. It's very, very important how we handle this pullback we're going to get in the next week or two. We need to be able to hold strong momentum and be able to hold the pullback that we're going to get at some point. It needs to hold in order for us to continue upside in the markets, right? So the VIX needs to hold its pullback. The dollar needs to hold its pullback. So these next few weeks or next couple weeks are going to be very crucial in terms of like what's going to happen. But the weekly timeframes are kind of giving it away a little bit, I would say. So that's that. And then the last thing is, we all know bonds have been doing terrible recently, right? Okay, so check this out. So here we go. So first things first, we had a weekly squeeze fire off in bonds. We flushed, right? We flushed hard. Now we're kind of at this demand zone / support area right here. You can see we bounce here, bounce here, bounce here, and bounce there. And now you can see, just like the dollar, the weekly squeeze is losing momentum. It's losing momentum for the first time since August, mid-August, right? We've had strong momentum since honestly June, and now we had our first bar of lost momentum. That's a start, right? I'm not saying go long the bonds, but like that's a start, right? Okay, we go to the daily time frame. We haven't flipped structure yet. We rejected that 55 EMA, but you can see momentum is starting to roll on the weekly or the daily time frame. If you look at what happened to the S&P 500 when we lost momentum here on the weekly squeeze to the upside, this was our first bar of lost momentum. Notice what happened. I bet you it's going to look very similar. It's going to have a daily squeeze and it's going to roll over to the downside, right? daily squeeze, and it rolled over to the downside, right? Okay, cool. So daily squeeze, roll over to the downside after that first bar of lost momentum. Okay, now keep that in mind. A weekly bar of the S&P, or a weekly bar of lost momentum, and then we had a daily squeeze that triggered us the other way. So that's what happened here, right? Okay, so look at the dollar. First bar of lost momentum here, and now we look at the daily time frame. Okay, now we have a week or a daily squeeze that might trigger us lower. That's complementing the weekly time frame. Same thing, but inverse for the bonds, treasury bonds, right? First loss of momentum, and now, okay, we're having we may have a squeeze that pushes us to the upside, like a reversal type deal. So that's kind of what I'm watching for. And this is also, if bonds push higher, this is going to help, like, because this works inversely. If you understand how bond futures and stuff like that work, this moves higher, it's going to help the stock market. If the dollar moves lower, that's going to help the stock market. So that's kind of my view in terms of basically what I think the markets are going to end up doing, right? Okay, so you've got all my points, right? You've got all my reasonings. This is like a longer term view, but I'm expecting this to play out within the next couple months into early Q1 of next year, right? So that's kind of my idea, and it can change quickly, and I update you guys, day-to-day basis, but like that's my view in the markets. And I think last week was a very pivotal market and very pivotal moment in the markets in terms of the dollar, in terms of treasury yields, in terms of the S&P 500, and all of this, right? I think it's all going to play together, and it's kind of like the perfect storm for a short covering rally, even further than we saw yesterday or last week. Okay, so keeping all that in mind, let's look at some stocks that I'm going to be paying attention to from a longer term perspective. Meta. This one has held up beautifully ever since we've been dropping in the markets, right? It's held up very cleanly. All we need it to do is flip that momentum. And like we've got a 3-day squeeze that looks great. We've got a 4-day squeeze that looks great. We've got all the pieces of a good puzzle here for Meta, right? So Meta looks great. Microsoft, this one we caught last week, but this one still looks great. We've got momentum turning to the upside. Let's see. Let's how that 3-day look. 3-day looks beautiful. 4-day looks pretty good. But Meta obviously looks really good. Adobe is another one that I want to be paying attention to. So weekly time frame, clean consolidation. Looks really good, right? 4-day looks good. It didn't pull back when the rest of the market did. So this is kind of like that spring action I was talking about with Microsoft. Once the compression was released to the downside on the S&P 500 and the NASDAQ, then that thing shot up, right? And that's what I was expecting. I'm looking for something pretty similar here, right? So the main sector that I think looks really good that you want to keep a close eye on is tech. So I think the S&P 500 is going to move, so tech is gonna lead this rally, which technology makes up 28% of the NASDAQ, 28% of the S&P 500, 49% of the NASDAQ, and then roughly about 18% of the Dow, right? And I think the Dow might be a laggard in all this. But I think that NASDAQ is going to lead us because it's so tech heavy and all these tech names are looking pretty good. Not only that, but another key sector that's in the NASDAQ that's not as important in the S&P 500 and the Dow is XLC, which is communications. So this would be Meta, right? That's why I like Meta so much. This name looks really good. The structure is held up really well. And I think this weekly squeeze is ready to fire off. We crossed that 200 weekly SMA or EMA. We're holding above it. Chart looks clean, right? And then we go look at, okay, some names in there. Google doesn't look as great, but structure still holding up pretty well. And then let's see. And then we have Netflix, which I think is second to the Meta, right? So I think this one looks great. But main watch list here going into this week, I gave you Microsoft as my main watch from last week. My main one for a longer term view here is an takeout 330 easy, and then we go see 383 and then 400. That's kind of my expectations. If you like fibs, I think we've got 342 from immediate target, right? And then all-time high, and then 400. So that's kind of the tickers that I'm watching going into this week. Another one that looks really good, but I don't love the sector as much, Amazon. This one looks great. We've got momentum losing to the downside. We've got the same thing on the what is this? On the daily, or the 3-day. Let's go check out the 2-day. Nothing really there. 4-day, similar story, but you can see this kind of looks great. Okay. I was going to show you one more that okay. So a sector that I think is really good in terms of like a daily chart that I'm going to be paying attention to is like weird retail names like Abercrombie and Fitch. So super random, but look how beautiful this chart is, right? Clean higher highs and higher lows. We just made an 52-week high, and actually, yeah, we just made a 52-week high just on Friday. I think this one could have a move much higher, right? It needs to break 70 to get to that 77, but I think this one looks great if you buy it on a pullback, as long as the squeeze doesn't fire off, and run that thing in earnings. Another one is Spot. I think this one, probably one of the main ones on my watch list here. You can see I was already charting it up. I think this has a great risk to reward if you can get it a pullback into the buy zone. This one has a clean move back to that 182 area, and that could be a huge play in terms of risk to reward perspective. One other one I'll give you, Crowd. This one looks great as well, and we have earnings coming up. This one held up when the market was pulling back. It still made higher highs and higher lows when the market was pulling back. Okay, so you guys said you want me to take a look at oil weekly chart. Okay, so this one, it's kind of just a sloppy mess, right? Like this is kind of tough to trade. You can see we're kind of trading in this range between basically the 52-week low and 52-week high, and we're at a key resistance. So if you wanted to short it, I'd wait for the momentum to shift back downside, and then you could short this one. Oh, this is Colgate. You're right. My bad. CL futures. Here we go. Okay, so this one, so it's losing momentum. There's nothing for me to do on the weekly time frame. Daily, this one looks okay for a short. Could be a liquidity grab under the 200 EMA. But I think that if it loses the 200 EMA, this is an easy short that you could take back down to like 77 and then really 74. So that one doesn't look bad. Just watch out for that support. A lot of liquidity comes around that support of the 200 SMA. Riot. This one looks more like a reversal. So in my opinion, I just wait for the structure to flip. You want to see the EMA stacked. I mean, there's a lot of other things that look a lot better in this than this name. And like meaning like Microsoft, Meta, names like that. This is just kind of sloppy, right? Like there's no clean trend. Like would you, because you guys will throw me tickers all the time. And I'll tell you, like someone threw me, I think it was maybe snow or something like that the other day. And I was like, well, okay, look at this one from a weekly time frame, but then look at Meta. I would take Meta 10 times out of 10 between those two, right? Apple. Similar story here, right? We had a fake out for the squeeze to fire off. This one I think is just we're holding this support, right? Well, actually, we're trying to hold it, right? We're kind of chopping around it. So let's see if we can get above this support from the weekly time frame. And this one's kind of a laggard and compared to the rest of them, but I think this might be an inverse head and shoulders as well. For a day trade that I think you could do this week, I was paying attention to this one here. Wait for the momentum to shift bullish, and you could take this to the long side. And then you could look for this to head back up to like 180. Well, first fill the gap and then go hit 180. So I like that. I think that's a decent opportunity. Yeah, so that's a decent opportunity there. Yeah, so look for that 179, move stops up and try to squeeze that last bit of 180 or scale out half when you get above this high, and then just see how far the rest can run with a stop at break even. So yeah, that's kind of my perspective on things. So yeah, you're talking like Riot. I'd lean more towards coin. Just because it looks a little bit better. It's above the 200 SMA. It's not as much of a reversal, even though like, and you've got all this support right here, like that is kind of holding. It's like this, it's not necessarily like a area, but more, or it's not like a line, but more of an area that potentially could be bouncing off of to have a move. The risk to reward is good on that, but yeah. So that's kind of my perspective on the markets this week. And if you guys have questions, absolutely DM me or just message me in the trade floor. If you want to trade with us, we call it Microsoft. We had a great trade last week. I think we're going to have a lot of great opportunities this week. If you guys are interested, 7-day free trial. It's only $20. Microsoft paid out years of the membership last week off of one trade. So yeah, that is linked in the free trial section of the Discord if you want to join us and come trade with us. But if you guys have more tickers, just let me know. But that's my perspective on the markets. That's what I think is going to happen. I think last week was huge for the markets. And I think that as long it's really, if I could sum this up into one thing or one sentence, last week was huge for the markets in terms of the bulls. Now we need to see how everything handles the pullback. So how the dollar handles the pullback, how the S&P 500 handles a pullback, because there will be a pullback. It's just, how is it going to handle it, right? And then how is the NASDAQ going to handle the pullback? And then from there, once we can see it handles the pullback, that's kind of like, and that weekly squeeze starts to set up, that's when you kind of get aggressive and we start really getting into some really good positions. But yep. All right, guys. Thank you guys. Have a good rest of your night. Let me know if you have any other questions. Thanks for coming, and I will see you guys for the markets tomorrow.